Hey guys, welcome back to another video. In this video, I'm going to be talking about ConocoPhillips for their third quarter and fourth quarter earnings results for 2023. We can see over the last year, the stock is up 3% and the rest of the market is up almost 30%. So ConocoPhillips is severely underperforming the market over the last 12 months. So let's get into their business model, talk about how they make money, also talk about their financial statements, and then lastly, value their company using a DCF model. So ConocoPhillips' business model is pretty straightforward, similar to the other oil and energy companies. Basically, this company is one of the world's largest independent exploration and production companies in the oil and gas industry. ConocoPhillips owns and operates oil and gas fields all over the world, and it makes money primarily by developing and selling crude oil, natural gas, and natural gas liquids to a variety of customers, including traders, utilities, and other participants in the energy sector. Licensing agreements and partnerships with other oil and gas companies like ExxonMobil and Chevron allow ConocoPhillips to make money by contributing its engineers, scientists, and capital to joint ventures in return for a share of the production profits. Also, selling off certain assets like oil and gas fields and processing facilities can help boost revenue and profits for this company. And then lastly, just to highlight, the company's profitability is closely related to global oil and gas prices, which can fluctuate wildly as a result of changes in supply and demand, as well as a result of geopolitical events. The recent wars around the world, for example, have acted as catalysts for an increase in demand for oil, which resulted in sharp price increases of oil and gas, leading to a spike in profits for ConocoPhillips, as well as other oil and gas companies in 2022. Managing these profit increases, lowering long-term debt with lenders, and then also distributing these cash profits to company shareholders is the primary goal for ConocoPhillips. So now we can look at their financial statements. As we can see right here, this is their income statement for the third quarter. It looks like for the third quarter, they had about $14.8 billion worth of revenue, and that's down about 32% year over year from $21.6 billion. And then we can also see that they had net income of about $2.7 billion, down from $4.5 billion. That's a decrease of about 38%. So, obviously not very good results for the year over year for the third quarter. For the fourth quarter, as we can see right here, we can see, or actually for the full year, it doesn't really show fourth quarter here, but for the full year, they had revenue decline of about, looks like 28% here from 78 billion to 56 billion. And then also net income decline of about 41% from about almost 19 billion down to about 11 billion. And although it doesn't say it here, Q4 revenue and earnings wasn't really that good either. Their revenue declined about 19% in the fourth quarter, and then their net income declined about 7% in the fourth quarter. So obviously it's been a pretty tough year for ConocoPhillips, and they haven't really been able to produce the same profit that they were able to produce last year. But that being said, because of all of the profits that they produced in the last year, they still have a lot of that cash sitting on their balance sheet. As we can see right here, $95 billion of total assets and about $49 billion of total equity, with $59 billion of retained earnings. That's an increase from $53 billion last year. So up about $6 billion. That's a lot of cash. Obviously, ConocoPhillips is a dividend paying stock. So this is definitely a lot of capital that ConocoPhillips can return back to shareholders. Then lastly, right here, we can see their cash flow statement. Operating cash flow was about $19 billion, and it looks like for their financing activities, they paid out dividends of about $5.5 billion and also repurchased $5.4 billion of common stock. So in total, they returned about $11 billion back to shareholders through dividends and repurchases of common stock. Now we can see the DCF model here to calculate the intrinsic value per share of ConocoPhillips. I'm using a growth rate of 14%, which I got from the historic growth rate of their free cash flow over the last 5 years. In 2019, it was about 4.4 billion, and then in 2023, it was about 8.7 billion, which is about 14% per year. The weighted average cost of capital that I'm using to calculate the discount rate for this DCF model, I got using this calculator right here. You can take a look at it or pause the video right here to get a better look at it. But I'm not really going to go into too much detail for this, but we can see this is basically how I calculate it, about 7.8%. And then we can also see that on their balance sheet, when you subtract debt from cash, it comes out to about 13 billion, and they have a little over 1 billion shares outstanding, putting their intrinsic value per share at about $154 per share, which means that at the current share price, they are currently trading below intrinsic value per share at $112 per share. So that's a good sign. Obviously, this is taking into account the assumption that they're going to continue to grow at these growth rates in the future. But considering that these growth rates aren't really that out of the blue, they're not that optimistic, they're just basically normal, I wouldn't really say that this is unrealistic. So it's definitely possible that ConocoPhillips could be trading below intrinsic value. Then we can see industry analysis comparing them to Chevron and ExxonMobil. It looks like ConocoPhillips has the highest profit margins out of the three companies, and then they also pay a dividend, but the lowest dividend yield out of the three companies. So based on this, for profit margins, it looks like ConocoPhillips is definitely the most profitable company, but they don't pay the highest dividend yield, as we can see right here. Lastly, I wanted to compare ConocoPhillips to some of the other companies we've looked at on this YouTube channel. We can see Conoco comes in 7th place on the intrinsic value table, showing companies' stock prices compared to their estimated intrinsic value per share. And it looks like ConocoPhillips is trading at about 73% of their estimated intrinsic value. We can see some of their, or actually I should update this because I have ConocoPhillips listed 2 times here. So I'm gonna have to remove this and then put this here and move everything else up. But basically it comes in about 7th or 6th place, right around the middle of the table. Then we can see for growth rates, ConocoPhillips has a 14% growth rate, puts them in 9th place on the table here. They also pay a 3.37% dividend yield, puts them in 5th place compared to the other companies we've looked at. We can see for profitability, Conoco didn't have a high enough gross profit margin, but they did have a high enough net profit margin at about 19.5%, puts them in 10th place compared to all the companies we've looked at. For year-over-year revenue and earnings growth, Conoco makes it onto the table, but I don't think they'll stay there for long because they basically had revenue and earnings decline. It was only slightly better than the other revenue and earnings decline we've seen from other companies so far. Q3, they also had revenue and earnings decline, but because every company on this list had revenue and earnings growth, Conoco obviously can't make it onto that table. And then lastly, for stock performance, it looks like ConocoPhillips is up about 61% over the last 5 years, which means that they're not good enough to get onto this table. Tesla had the highest at 850%. So let me know in the comment section down below what you guys think of ConocoPhillips. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.